So let me just kind of get going here. But yeah, as Brent said, we're going to be talking about the swing trader and also the pro trader. And we'll just be giving a year-to-date performance update of that. So thank you again for taking the time to watch to do the webinar with us. It probably won't last long, maybe 30 minutes, maybe 45 if we do some questions, but we'll be kind of in and out. And we're going to, at the end, you might not have heard it, but we do have a special offer that we wanted to do for people that are watching the webinar. So if you're still on the fence thinking about it, make sure you mention the webinar code. And at the end of this webinar, we'll talk about what that is. But again, thanks a lot for taking the time to watch it. So let's just kind of jump right in here. All right, so the first thing I would like to do is go over the disclaimer with you guys real quick. So everyone that's been watching or following us for a while, you're aware that we're not a commodity trading advisor. I'm not a broker. I'm not a CTA. We are what's called a third-party trading system developer. What that means is I can't give personal advice. I can't advise people. I don't directly control client accounts. It's not the kind of thing where I have a power of attorney over the accounts. And so that's really the one of the big differences between like a software guy and an actual CTA. CTA would have power of attorney. We do trade the algorithms, so they're traded under what's called a letter of direction. And then I just want to remind everyone that trading futures and options involves substantial risk of loss. It's not appropriate for everyone. And we're going to be talking about past performance. Just remember, it's just the past performance is not indicative of future performance. And I could go on and on with the disclaimers, but I'll probably leave it at that. If you for sure check out the website because we have more. Also, I want to differentiate between, we're going to be talking at times today about the live trades and then other times about sim trades. Just keep in mind, when we talk about sim trades, there's another disclaimer we have to add. And it just talks about that, hypothetical performance has significant limitations, and you'll see the disclaimer when we get there. But other than that, let's just get into it. All right, so as we pointed out, the agenda for today, we're going to be talking about the swing trader. We're going to be talking about what it is. We're going to be talking about the year-to-date performance on it. And then we're going to look at the pro trader, what it is, and the year-to-date performance on that as well. And then we'll go over the pricing and the special offer. But for those of you that aren't super familiar with us, really what all this means is to get started, you typically, the first step is you got to pick which system you want to trade, which algorithm. The next step is that you choose which broker you want to trade the algorithms under. And then the final step is you just begin trading and you do a letter of direction with the broker. But there's multiple brokers that support what we do. But really what we're focused on in this presentation is this first step, which is picking which algorithm you would trade, going over the pricing and all that. So let's just keep going through it. So we're going to start with the swing trader. And the way I wanted to begin talking about it was really just to show this chart. And I apologize because I know it doesn't look very even, but I wanted to line it up so that the S&P would be lined up with the 10-year. But in essence, what the swing trader is it's a system that's one of the more popular ones that we offer. Probably 80% of our customers are on that algorithm. And it trades the S&P E-minis, which is the algorithm on the top, as well as the 10-year note, which is the one on the bottom. And again, this is a fully automated, fully algorithmic system. So it's not the kind of thing that you have to stare at a chart and place your own trades. Now, again, you control your account. We don't control it under a power of attorney or anything like that. So you're able to get out of trades early, change the allocation, turn off an algorithm. For example, turn off the 10-year but leave the S&P running. Now, usually what we tell people is, we can't give you advice, but for sure we've seen more success, I would say, with people that just let it run. In fact, the emotions of trading is one of the big reasons why I'm a quantitative trader. And those of you that are on that are traders, you know exactly what I'm talking about. But we're going to first look at the swing trader, and I'm going to spend a little bit less time on that one just because we talk about that one a lot. In fact, there's the previous webinar was on the swing trader. On the website, there's a video of the swing trader. So we'll kind of jump right ahead and just get into the results. So when it comes to the back-tested results, that's kind of what we're looking at here, and hopefully you can see it. But this again is taken directly from the website, and it's really the back-tested data. So that's what I wanted to label it and make sure we're clear on that. And so you want to check out this disclaimer on the bottom, but just think of it this way: back-tested data is going to be the most optimistic data that anyone ever shows you for the most part, because it has the benefit of hindsight in essence. So you can write code, and as it back tests, it's able to pick what stops to use based on what would have worked in the past. And so it's almost by definition going to be the most optimistic. But I still think it's helpful to show, because it gives you an idea of what the potential of an algorithm might be. And it also gives you something to measure the live returns against. And that's probably the more important part. But if you look at the swing trader, and again, you'll see this on the website, we have back-tested data going back from June 01 to January 19. The win rate is about 78%. Total number of trades is 1,722. It's got an average gain per month, dollar gain of 827. The annual rate of return is 49% based on a 20K account size. And then we do model in $650 per round trip trade all in for commission, and then $1250 per round trip trade in slippage on the S&P, and then $24 of slippage on the 10-year. All the slippage so really what we're saying is, for every round trip trade, if the algorithm says it bought at point A and got out at point B, and let's say in the sim account that would have made $200, we're just saying that we knock $650 off that and another $1250 in slippage to, in essence, bring it down about $20. And so that's really the point of that. But let's just start looking at the live returns now. And so, because in a lot of ways, this is going to be what's most important probably to people. But the year-to-date live returns on the swing trader, and again, that's the algorithm that trades the ES and the 10-year. It's the one that trades those two algorithms. We in the test, in kind of the base account that we have to track the live returns, it's generated $6,617 as of about an hour ago. So that includes kind of net liquidating open trade value from the 10-year and also the ES. But that's about $6,617 per unit traded. Now, a unit would be something to the effect of like a $15,000 unit size would be one unit. And so think of it this way: if you had a 15K account and you started at the beginning of the year, it would be up about 6,617. So it'd be about $21,600 in it, or up about 44% for the year so far. It's had 52 trades, and they've been about 75% profitable. Actually, when I saw that, it kind of threw me off at first. I was thinking, wow, what are the odds that it's exactly 75%? But that is an accurate number, though. So the only thing is, what's not included here is the one-time fee that my company charges, as well as the 5% on a new high water mark kind of maintenance fee that we do. And so that's not included in this, but this is kind of just the raw return of the algorithm. So when you do the calculation at home, or when you're analyzing it, for sure you're going to want to think in terms of, okay, that's great, but what do they charge that one-time fee, to think of it as coming off the top end of that as well. So with that, let me just keep powering through this so we can get into the Pro Trader, which I think is why most people are probably on anyway. So to really talk about the Pro Trader, I need to just clarify that the Pro Trader has traded live now really since around January of this year. So the one negative with the Pro Trader is it's still a relatively new algorithm. But if you look a little bit under the hood, what you see is that the algorithms that are traded in it, 5 of the 6, so the vast majority of the algorithms in it have actually traded live quite a bit longer than 3 months. But we have to go with kind of the shortest duration, because so that we're just clear and that there's absolutely no chance that we'd be interpreted as misleading people. So in other words, the 2 algorithms on the left that you see of the 6 here. And I'm not sure if you can see my cursor, but maybe not. But the one on the top left and then the bottom left, the top left one is the momentum ES algorithm. The bottom left is the 10-year note. Those are the same 2 algorithms that are in the swing trader. So what the Pro Trader does is it adds the 3 day trade algorithms that we have, which are the 2 on the right, and then the one on the bottom middle. Those ones have traded live for a couple years now, and so so the two on the left, the swing trader, those have really traded live for a little over 3 years. The day trades have traded live for about 2 years. The only one that's really new is the top middle one, and it's called the Geronimo algorithm. But what it does is it's very similar to the momentum ES algorithm in that it trades the ES and it kind of buys before the market close. The big difference, though, is that what it'll do is it won't take as many of the higher risk trades. So what that does is it allows it to perform better in sideways moving markets. But let me do this. I want to jump into the charts so that you can kind of see. So give me 1 second while I attempt to share my screen. It's always interesting when I do this, but we'll give it a shot here. So, yeah, so basically, though, it trades the 2 algorithms on the left, which are the swing trader, plus the 3 day trade algorithms, which are the 2 on the right, plus the one on the bottom middle. The new algorithm is this one here, this Geronimo algorithm. And that's, honestly, most people, that's the newest one that people probably are the most interested in because, on our website and through the other webinars, we talk about these other ones quite a bit, actually. So in order to just kind of show you the new one a little bit better, all I want to do is just line up these 2 charts to kind of show you something. So so this chart here, this is the momentum ES algorithm. And again, the one on the bottom is the Geronimo. And again, these 2 plus the other 4 make up the Pro Trader. But notice here how this algorithm got stopped out of a couple trades, and then got stopped out of these 2 trades, then it got into a trade here. Notice this one, though. So in other words, what the Geronimo does is it only takes the super high probability trades that are on the momentum algo, and so, but it is a new algo. It's new in that it's looking at something slightly different on the filter that these use. But the key thing to remember is just that it allows you to have some of the profit on the ES without as much of the risk from some of the higher risk trades, at least. I mean, it's still futures, so it's still going to be risky. Don't hear that it's like a no risk kind of algo, because these obviously all have inherent risks due to the nature of trading futures. But so what it does, though, in essence, is this: it allows you to double up on the ES when we have a winning ES trade, and then and really what that does is it allows you to make a little bit more on those ES trades. And then the other trades are still a 1-to-1 correlation. So it's 1 10-year, 1 on the day trade shorts, and then 1 on the day trade long. So with that in mind, let me do this now. I'm going to go back to the slides, and now I know you can just see me and Brent. So let me go back to the slide, though, and we'll get back to just kind of the performance now. Okay, so what we're looking at now is, again, the back tested for the Pro Trader. Okay, and what you'll see is that number one, the win rate is a little bit lower, so you're looking at 72%, where the swing trader is more like around 75% roughly. This is a little bit lower. The reason why is because it trades those 3 day trade algorithms, which have a lower win rate. It does have a lot more trades, and the average dollar gain is a lot higher. Remember, $800 versus about $1,300. But remember, this algorithm requires a $30,000 account size, where the swing trader requires about 15 to 20K. We show it as 20K on the website now, and then the drawdown, of course, you're looking at about 13,000 in the entire back test, and that was seen in 2018. And so, yeah, so that's kind of the basic back tested data that we have on it. And honestly, if you want to see more of the back tested, just send us an email. I have a PDF that's about at least 100 pages long. That's all it shows is the back test. It shows all the trades, all the week, every stat you're on is that this algo, the Pro Trader, has really only traded live early January. So that final slide, where we're looking at the year to date though on the sim account. Now, I want to be careful though, because it's not necessarily back tested that we're looking at now with the 2019 returns, because again, it was optimized last in kind of early January. So the majority of this data now is still on a sim account. In other words, it's not live that I'm showing you, but it is sim. So it's not really back tested, but it is on a sim account. And sometimes I'll refer to it as like a blind walk forward return. In other words, it's out of sample from the in sample back test, and therefore a little bit more reliable, but still not as good as live. So just keep that in mind. In the next few months, we'll eventually start having you on this. But the other one, 5 of the algorithms of the 6 have traded live. So it's not like it's a brand new trader though. In the sim account, it's done about 16, which is about a 38%. And there's a typo there because that's not per 15K traded. That should be as per 30K traded. It does have 111 trades, so almost twice the number of trades as the swing trader. The percent profitable, 69% versus 75. Again, the drop off is because of the day trade algos that are, in a lot of ways, those are coin flips on the win rate. Now, of course, they win a lot more than they lose, which is why those are profitable in the long run. But then the year-to-date max drawdown this is seen has been about 4,000 between February and March of this year. Year-to-date, algo per 30K traded is up 30, where the swing trader per 30K or per 15K traded is, let me make sure I give you the right number. Just go back here for a sec. Oh, there it was. So so you're looking at 44% per 15K. Which you might be thinking though, well, wait a second though, if this is 15K, the pro trader's 30K, why not just trade 2 of these then? In which case you would actually be up a little bit more. You'd be up about 6,600 times 2 as opposed to 11K. And what I would say to that is, yes, that is probably the case, which is the reason why. But the only thing that doesn't account for is that it's still a reset, and so in my opinion, it's still kind of better to trade 6 algos in a lot of ways than 2. But that's really up to you guys. You know, again, I can't give anyone advice or even lead anyone towards any of these. But I can talk about the data and just show you the data, how I look at it. So hopefully hopefully this has been helpful though. I think the next part we'll be talking about price. And I'll probably queue up Brent for that, but I'll just say this in closing before we kind of end it. You know, first off, thanks a ton for watching. We're going to talk about price now, and I'll let Brent do that. But just think of my company in these terms, if, you know, and I would appreciate is that, you know, I'm an engineer. We're a real company. We are a software company. We don't give personal advice. We don't manage your account. But these algos do trade under a letter of direction. So the vast majority of our customers are seeing similar returns if they're on the same package and if they leave it alone. You are able to get out of trades early. You're able to adjust trade sizes. You can quit at any time, take money out. But, you know, we've been very successful, though, and the vast majority of our customers are happy. Every once in a while, someone's not, though. So, you know, we're not perfect. These algos aren't perfect. There's risk involved with futures. I'll just talk about the pricing briefly, though. So the way that we do the pricing on the swing trader, we do it at $5,500 is the one-time fee. And I kind of cringe when I see the red cross out, but I did it because I was quickly putting these slides together. But you know, what we wanted to do though is knock $1,000 off the price of that. What that does is it allows you to trade up to 4 units on the swing trader, which would be about 60K. So again, think of it as every unit is $20,000. The other thing that we do on the back end, we have a maintenance fee that we bill you, and that's based on how well the algos do. So if the algos are up on a new high water mark, in other words, they make a new high for the month, then what we do is we bill you for 5% of the profit only. So a simple example would be you start with 15K and you're up 1,000. We would send 1,000 net liquidating value. We would send you a bill, $50, 5% of the 1,000. Let's say the next month you lose 1,000, you don't get a bill. let's say the next month you make 500, so now you're at 15,500. We still don't bill you because you didn't go above the net kind of new high water mark that you were at. So that's how we do the pricing on the swing trader. And if somebody wants to trade 8,000, and we'll send you a quote for that. But we do charge based on the amount that you trade, and we do that to control the liquidity, because every contract we sell, it takes a liquidity out of the algorithm. So that's that. Trader, which again, it trades all 6 algos, and the back-tested performance of it is a little bit better. So because of that, we do charge a little bit more on that, 6,500. Normally it's 7,500, but again, we knocked 1,000 off, and we do the 5% maintenance fee on this one as well. Other than that, though, I mean, feel free to. I'll kind of leave with this. Feel free to email Brent, and the number's right there if you have any questions at all. We'd be happy to do a kind of a one-on-one demo if you like. In other words, I'll walk you through the trades, show you anything else you want to see. Some people want to see more data on the live trades. We're pretty transparent. I mean, pretty much anything you ask, if we're able, and we'd love to help you get started with these. It's 100% automated. Again, algorithmic. It's the reason why I started doing this is because I was, in essence, a failed day trader. My emotions would always get in the way of my trade, so I started writing algorithms for the market and really started finding my niche there. And so if you're tired of your emotions getting in the way of your trades, and you just want to rest from the market, but you still want to be in the market, and you don't mind the risk of futures, then for sure, give us a call. And again, we won't give you any personal advice. So if you need advice on retirement plans or anything like that, you really should go to a financial advisor in your local area, and we'd be happy to work with them as well. So in other words, if you go to them and talk about our algos, and they say, well, I don't know about these guys, have them call us, and we'd be happy to talk to them as well. And so, whatever we can do, we try not to be high pressure at all. And so hopefully no one gets that sense that we do that. But we do answer your questions. We'll take the time to help you out and guide you through the products that we offer. We have a pretty good online reputation. We've been around about 5 years now, A+ on the BBB. The vast majority of our customers are with us a year later. So most of our customers are really happy with what we're doing. And again, with the kind of results we're seeing right now, it makes sense that they would be happy, right? The other thing I'll just mention real quickly, with the swing trader, we have a lot more live history than just 2019. In fact, the previous webinar we did, we kind of showed the kind of since live returns on that. And there's a 40K account that is up to about 113K right now. And that's without compounding. So it's traded as if it had 40K the entire time. That's on live data, but it also doesn't include any of the fees that we do, but it does include the broker fees. So we do support a few different brokers, the Fox Group, Interactive Brokers, TradeStation, even NinjaTrader now. There's a few other smaller brokers. So we support multiple different brokers. And with that, I'm not sure if there's any questions. Maybe I'll look in the chat. So just give me 1 second, and I'll see if there's any that I could kind of quickly answer. So just give me 1 second. Okay, yeah, so any questions, feel free to send them in the chat. Let's see. Yeah, I don't see any yet. I know there's a few people still on. Yeah, hopefully everyone's been able to hear me okay. I guess we do probably need to figure out a way to get our audio and video running smoothly. But yeah, I mean, I'm trying to think. Some of the common questions we get are, can this trade IRAs? The answer is yes, it can. It supports IRAs, it supports cash accounts. A lot of people ask, well, I've got Ameritrade we support them? The answer to that one is it's a little bit harder because we have to have a way of getting the signals to your broker. And so because of that, we typically will say, no, we can't support them. I mean, if there's a way I could, for sure, I'd look into it. Most of those brokers, though, they just don't really work well with the kind of program we offer, because the signals come from TradeStation. But if you want to use TradeStation, you can. The Fox Group is a popular one, but we also support Interactive Brokers. So a few different brokers. Other questions, though, would be, what's the max amount that people can trade? That one is, I would say it's a little bit trickier to answer, but the short answer is we can support up to easily another 5 times the amount of volume we're doing now on the E-minis. But let me back up a little bit. So right now there's about 800 contracts trading these algorithms, and that incurs about a tick of slippage. What we do to address the slippage is we're able to place the trades on a candle offset, which in essence opens up an entire lane for the algorithms. And each lane you could think of as supporting easily about 1,000 contracts. And there's about a 10-minute window there. So really between 5 to 10x of what we're doing now, which equates to the company can offer a lot more of these licenses that people can continue to grow into. And so there's really no concern that we have as far as, act now or you're going to miss the opportunity. The only thing I will say, though, is the discount that we're offering on the webinar. Actually, I'm glad I kind of stumbled upon this point, because we really only are going to hold that for about a week. Only reason why is because we just can't hold it forever. And so not to pressure you, if someone thinks they want to do it, but they honestly just need a few weeks to think about it, all you have to do is ask us, and 9 times out of 10 we're going to say no problem. We'll give you another week to think about it, or we'll work with you, because like I said, we don't want anyone to rush into this. I mean, we get it, it's your money. We carry a heavy burden knowing that these algorithms are trading a decent amount of money, and so of course when we have great months, it's good. But I want to also just emphasize that the algorithms aren't perfect. You will have losing months. It's for risk capital. But again, if you're currently a trader, you're already trading the futures market, you're tired of your emotions, maybe you're a failed day trader, maybe you just want to be active in the market, and you don't mind maybe swinging a little bit harder for returns that would outperform the market, and you're willing to take on that risk, then I think what we have is a great program. The swing trader's been live now for about 3 years, actually a little bit more, and it's well over 110% now. I believe at the beginning of the year it was up about 100. It might have been 130%, and if we're up another 40 now, I mean you're talking 160, 170, which I know sounds unbelievable. So I get it. A lot of that, though, is because 2017 was just so incredible. 2017 we're up about 104%. This year, again, we're up about on the swing trader about 44%. And so that when you start stringing those together, it really does add up. Now, 2018 though was an example of a year that we just kind of grinded sideways. And anyone that's on this that's a current customer that was trading then, you know what I mean. I mean, so it will have periods where it just kind of meanders sideways. But what you will get out of us is you'll get, I hope you'll experience, stand-up people that'll kind of show you the reality of what we're seeing, that will, you're not going to see us in front of a speedy, race car. This isn't a get-rich-quick scheme. Really, all we are is traders, and I'm an electrical engineer, and, I think I've got some really good algorithms that have done well on live accounts, and I believe will continue to do well. And so we'd love to have you come on board. And I think that's it. Now, at this point, I'll just double check that there aren't any more questions, though. Sounds like Brent is on again. Hey, Brent. Oh, hey, Brent. Yeah, it's still a little broken up there. Yeah, sorry, but I see the question, though. Yeah, the question is, let's see, can you adjust the percentage of the stop base on the daily ATR? So can you adjust the percentage of the stop based on the daily ATR? And Brent answered it in the chat. The stops are already set. So the short answer is no, but the longer answer on that would be, again, no, but there's but you wouldn't want to either. In other words, the stops are, when you think of a trading system, it's going to have entries, exits, stops, limit orders, and really they all tie together. So if you change one of those variables, you more than likely are going to need to change other ones as well, because they really do kind of mesh together as one complete setting. So if you were to change the stop based on the daily ATR, which is actually a great idea, and it's the kind of thing that I do code and examine. In fact, that one in particular, I have actually looked at. It does, in some cases, it does either like slightly better or slightly worse. I think the daily ATR, it was slightly worse if I remember correctly. I actually did it recently for someone because they were curious, and I was thinking, oh yeah, I wonder, that's actually not a bad idea. But one thing you could do though, if you had a larger account, you could certainly adjust the number of contracts you trade based on an ATR. So if you wanted to kind of reduce your risk by doing that, that would be something that anyone could do. So it's not like a risk strategy for you. But in other words, what the idea would be, if let's say you're getting 100,000 and the ATR is higher, so which would imply that it might get stopped out of more trades, and so it might therefore imply a little bit more risky period. And so instead of trading the full 100K, maybe you would trade 50K on that. But again, that would also depend on a lot of different things. So the short answer is no, you can't. But you could for sure. Well, okay, if you're on TradeStation though, then you could. So on TradeStation you could, because you could actually adjust the input of the algorithm as a stop. But again, it's not the kind of thing we would recommend. And I think there might have been a few other questions. So let me take a look here. Is there a setup procedure to adjust the stop? Okay, looks like we covered that. Yeah, it looks like Brent was sort of answering these. What's the best system for income? Best to look at a long-term strategy. Yeah, so when it comes to like a income generating algorithm or a versus like a long-term just kind of steady she goes algorithm, I mean, probably an argument could be made that they're really sort of the same kind of thing anyway, but for sure, this algorithm could be used to attempt to generate income. And yeah, absolutely. I mean, if our results continue the way they have, then it for sure would do a good job at that. The great unknown, though, and this is the thing that always makes it hard, is we just don't know. There's no guarantee that it'll continue, which is why it's really for risk capital. So no one should come into this thinking that they're going to make easy money, quit their job, and just off to the beaches or whatever. I mean, it's just not the way it works. I mean, even with an algorithm as successful as ours, as Brent would attest to, and anyone that has traded these algorithms for a year or more, they're when you look back, you see, wow, they're up a lot. People are really happy. But some of the day-to-day can be tough, because you get stopped out of a trade, you get stopped out of 2 in a row, and you see your account go down, and then there's that fear that creeps in. So it's never, I don't want people to think that this is super easy either. But that's not to downplay the algos. The algos are incredibly high quality. The issue that I'm talking about is true for any strategy, any trading that you do. In fact, you could argue that it's worse if you don't have an algo, because then you're more at the mercy of your ability to scan a chart or look at certain things like that. At least with an algo, it removes the emotional side of, am I going to place this trade that's really hard to make, or am I going to move my stop, or am I going to do that? As long as you let the algo run, it'll just do what it does. So let me see if there's any more questions. And thanks again, Brent, for being on. I mean, again, I apologize that the sound isn't good. Okay, this is a good one. Does this only run on the ES and 10-year note? The short answer to that is yes. These algos only run on the ES and 10-year note. The original algorithms I started the company with were on the NQ. We actually call that package the NQ Legacy, and there are still people that trade it actually. So that one was on the NASDAQ. What we found with the NASDAQ though is that the volume, believe it or not, is actually a lot less. It's probably about 10x less, or divided by 10. And so where we can support 1,000 contracts on the ES kind of per, roughly per kind of tick unit that we're comfortable with. On the NQ, you're looking at probably 100 before it's actually a little bit less than that. Then you start seeing more slippage. So that was the issue with the NQ. It's not that these algos couldn't run on the NASDAQ or the Russell or the Dow. It's that the volume is so much lighter. That is the big reason why we don't. Because if we did that, we would in essence only be able to sell a handful of licenses, and so it just doesn't make sense for us to really do that. Now with like the 30-year, that's one that does have about as much volume as the 10-year, and so that's one that we could move to. But the reality is the 10-year has even more volume than the S&P, and so there just hasn't really been a need to even think about that one. But yeah, the S&P though, the ES, I mean, it really has met our needs, and my philosophy has always been is if it's doing well on that index, there's really no need to do the others. Although I fully agree that it would be nice to be able to kind of spread it out across all the indexes. But the sad reality of that is there's just not enough liquidity really for an algo like ours that, because of its success, is trading on the order of about 800 contracts. And so yeah, so hopefully that answers that question. Let's see if there's any more, and then we'll probably wrap it up. Looks like it's about, hey, we actually hit 50 minutes, so I'm impressed that a lot of people actually stayed on. Yeah, so what about the S&P 500? Another really good question. Yeah, so you could, for sure, these algos could trade on like the SPY ETF. Absolutely, they could. The only reason why we don't is because think of it in terms of the S&P 500, the SPY ETF, the QQQ. Those are all equities, and they're kind of regulated by the SEC. The futures are more covered by the CFTC, and the NFA is kind of the self-regulating body that takes care of them. It's a long-winded way of me saying that my attorneys are focused on NFA-related things, and quite frankly, we don't do this on stocks, mainly because I don't want to have another attorney kind of review what we do. I'm just not as familiar with the rules on like third-party developers. I think you're still allowed to for sure, but I'm just not as familiar with how that works on that side. But there would be absolutely nothing stopping these algos. In fact, they would run very well on the SPY or the QQQ. In fact, way back when, that's kind of what we started with. It was the QQQ. But people would place the trades on the futures, but we use the QQQ to trigger the trades. But yeah, I mean, that's another really good question. And so short answer is yes, they could work on it. The only reason why we don't is, again, because we're comfortable with the legal standing and all that on the E-minis, and with stocks, we would have to kind of relook at a lot of that. Let's see if there's anything else, and then we will officially end it. Hey, that looks like that's it. So thanks again, everybody. I'll just close with one final comment on risk. It's not for everyone. It's okay. But if you have a desire, and Brent is waving, so I'll say goodbye for him. I know he's bummed that he doesn't get to hear himself on the replay. But thanks a lot, everyone, for sticking with us. Again, I'm sorry about the audio issues that we had and the chart going out when I was presenting as well. We'll do our best to get that stuff fixed. But other than that, though, thanks again. And again, this deal will be around for at least a week. If you want more time, just email us. If you're really considering it, you just need another week on top of that. We're not going to worry about it. We'll more than likely we'll grant you that. So, but we'd love to answer more questions. So shoot Brent an email, and I guess we go from there. But thanks again, everybody, and best of luck to you in your trading. And look forward to doing the next one with you guys. Probably another more technical one, kind of like I think the last one was a little more technical as well. So I think that's it. Have a great day, everybody. Bye-bye.